The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the show with our usual chart, which is the DAX. Disregard the first DAX chart that I put up. I hadn't refreshed it, and so it didn't have today's data in. As you can see now, we're trading below the 61% retracement in the Dow and in the DAX from our low back in September. The key point to watch here, if you'll look at the two red boxes that you'll see up there where it says at 0.97, what that basically means is that it didn't take out the previous high, which was also at the 78% level. So until it takes that out, it couldn't be very bullish. And now you can see, that the 382 pattern that we had, up 160 points away has broken, and now we have a tendency to move to the downside. If you'll remember, on Monday, we had our good friend Bill Meridian from Cycles Research on, and he made a very good case to expect a pretty good bottom coming in stocks around the 14th to the 17th of October. I think he had 5 different cycles that were coming together at the same time. We're going to be looking at something very, very similar to that. And I want to discuss a little bit about what's going on as far as the people in the world are talking about this wonderful crash that we're supposed to be happening. Hold on here. We'll take a look at this. I wanted to show you the Bradley model here because, we are definitely in an area where the Bradley model is supposed to be pretty influential. And this could actually invert up here. In other words, this if we have a big move down, we could be looking at a very significant bottom here, potentially in the stock market. But, you don't know that, so you just have to trade the patterns. So if you're looking at the Dow Jones here, you'll see that we've been in this nice little triangle that's been, going back and forth for the past, 2 weeks. In fact, it's made the smallest inside weeks that it's ever had, which is, the only other time it did that was in 2008. Before the big collapse, and so that made it a little bit different. Now, if we take a look at the Dow E-mini, which is trading overnight, you see they haven't traded overnight in the Dow, the regular Dow Jones. The Dow Jones family would probably never allow that because I don't think any of them wake up before 11 o'clock in the morning. But the main thing is this has already started to break down now. Now, whether that's going to be, something of, really super great significance, I don't know, but it's certainly, in a downtrend. We've been saying that, for quite some time just by looking at the New York Stock Exchange Index. Now, a lot of stuff is going on as far as rhetoric, not just what's going on in the part about the politicians, but if we look at this chart that I posted this also on Monday. This came from Business Insider. It's also been posted now by HSBC and one other European bank that shows the relationship, between the 1987 market and where we are right now. And as you can see, there is a pretty distinct relationship by looking at this particular pattern. Now, the way to look at this is that in 1987, let me just explain to you what happened in 1987, because you folks haven't been around. That's 29 years ago. Some of you folks probably weren't even born yet. But if you'll notice if you look at the top part of this chart on October 7th, 1987, if you go back 3 days to October the 2nd, there was a Venus-Uranus aspect there. That was that 618 Fibonacci cycle that I always talk about. In other words, Venus takes 255 days to go around the Earth at 365 days, so that's a 0.618 of a year. And if you go back and look at those hits, when you get those, you have a better than 70% chance of seeing a trend change on that day. We've seen Norm Winsky tell us about this several times, and he keeps it in his letter each week. But the high on October the 2nd was a perfect 61% retracement, and it was coming off of the high that we had made on August the 25th, which was harmonic convergence. I had been on TFNN, which is now CNBC, in Los Angeles with Bill Griffith and Sue Herrera, and I was saying that this was going to be the biggest top in the market in quite some time, and it would lead to a move of over 300 points, 300 points in the Dow Jones, sometimes in October of 1987. I didn't say the exact date, but I just said sometime in October. And what I did was the biggest correction that we had in this market going back over the past year, starting back in March all the way through August, the biggest correction had been 190 points. So I multiplied that times 1.618 to come up with 300 points. And of course, it gapped down 200 points on Monday, October the 19th. Now, are we going to see something like this again? I don't know. But this was an outlier event like we had never seen before. The Dow Jones on October the 19th was down 16.5% in one day. Of the 1,670 some issues, I believe, that were listed on the New York Stock Exchange at the time, there were only 13 issues that were up. Can you imagine how much confidence someone has to have in a stock when the world is coming apart to buy those stocks? I mean, they have to have inside information. Why else would they buy it? If you went back in history and looked to see what happened to those 13 stocks, they really outperformed the rest of the market for years. So anyway, this is what we're looking at right now. Whether this is going to happen or not, I don't know. Should you bet on it? You can, but I don't know if it's necessary or not, but it does happen. On that particular instance, I had bought, I don't do puts and calls very often, but this was, remember, 87. I had a daughter that was going to school back east right near there where Mr. Basil Chapman lives across the Charles River, and sure enough, she had a tuition due, and so I bought 10 puts. And I bought the October puts that expired on the 16th, which was a Friday. And the Dow was down 108 points that day, and I had made a lot of money. I'd been able to pay one full year's tuition with that, and I was extremely happy. Had I bought November puts, I could have bought Harvard. Well, not quite, but I mean, it would have made well over $1.7 million just on that small investment because it dropped so much. There was a problem to that, though, folks. As the market was going down the last 2 hours of the day, there was no liquidity in the market. Everybody was absolutely scared to death. We had more bankruptcies. The most bankruptcies at the CME was on the day when Greenspan dropped rates in the middle of the day in 95 or 96. It wiped out everybody because the S&P gapped 50 handles were before anybody could get out, and that wiped out many of the floor traders. Just cleaned them out, just wiped everything out of them. But this was a bad day, but there was no liquidity down there. All right, we'll get back to the real markets in just a second. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've posted the chart of the VIX index that we talked about on Monday. This was one of the ways of taking advantage of something that could be really dramatic coming into this super full moon that we have on the 15th of October. And that will most probably be something happening big on that Monday, the 17th. So unless we have a big reversal here today and tomorrow, I would expect the bottom to be somewhere between the 14th and the 17th, just based on that super full moon. And sometimes they don't work, and so but that's one way of looking at it. The good part about the VIX thing is it started in the right direction. So whether it's going to continue in that direction or not, I don't know. But this is a situation where there's some few people out there nervous, but frankly, folks, there are very few technicians out there compared to the rest of the people. I mean, you can see that by, the number of new people we have coming into the business all the time that know very little about technical analysis, and that's another reason why you have to be really skeptical, when you hear them talk about the fundamentals, because the fundamentals they can change very, very rapidly, as can the charts. So the whole point of this is to let the charts sort of guide you to where you're going. And we've been in an area of the VIX with virtually no volatility for a long time. We did get up to 20 just a few weeks ago, and before that we got up to 32. But we haven't ever even approached the old highs of 90 something that we had during 2008. Whether we'll have enough fear or not at that point or not, I'm not sure. But if we'll just keep in mind what's been going on in the world of finance here. Just let me show you. And this is the Fed's balance sheet, folks. And the interesting part about this, look at the steepness. This looks like the tulip bulb mania from the 1600s back in the Netherlands, Holland. And look at this thing. And this is from 2014. It's 2 years old. We're already way above 4 trillion. So this is unbelievable. Back in the old days, and if this were the money supply of pumping money in, gold would be trading at $3,500 or $5,000 an ounce. But that's not the way the game is played now. Remember, this is a giant experiment that Bernanke started, quantitative easing, and whether it's going to be working or not, it hasn't worked so far. Because, we certainly have an economy that's, even though we have lower unemployment, and that's mainly because they don't count the people that are out of work and other things, more people on food stamps, more people in poverty, so there's something wrong here with this program. And they're going to, the market is already telling you that they've already started to increase rates. The Fed's behind the curve on this one also. Folks, if you remember in 2007 in October during the Fed meeting, Bernanke came out, and just a second here, Bernanke came out and said he could see nothing in the environment that would cause any concern in the financial markets. This was at the top of the bubble for the real estate thing for 2007, 2008. The Fed never saw that coming. So a lot of people didn't either, but that's just it. I mean, you don't know what they're going to do. And in fact, when you watch what's going on in the news nowadays, you can't believe anything. I mean, it's like nothing I've ever seen before. It's just really it's comical sometimes, the stuff that is going on. I mean, it just blows me away. But anyway, that's neither here nor there. Okay. Anyway, there's going to be some pretty big volatility coming, and that's what we were looking at when we were watching this potential move in the VIX. The stock indexes, as we've looked at with the New York Stock Exchange Index, this thing has been going down for since May 19th, 2015, when we were on the air with Norm Winsky, when Mercury was retrograde and we had a new moon on that day, and that's when the market turned down. So we're still in a downtrend. We did make higher highs in the Dow Jones. We did make higher highs in the S&P, and we made a higher high in the NASDAQ, but we didn't make a higher high in the stock market. So that's then the stock market is that NYSE index, because that's everything that's included in the thing. The second thing to keep in mind is that we topped 2.5 months ago in our interest rate markets. We've been going higher in interest rates, but you can see that by lower bonds and lower notes. That means higher interest rates. So someone has already changed the playing field a little bit, and the Fed hasn't blown the whistle to come in and play the game. But pretty soon they will. They've already warned you that they were very close in September. They might come out tomorrow and do it. So you just don't know. The Fed is an independent body. They're not operated by the government, even though they're right there on Pennsylvania Boulevard. They have, it's a private bank for bankers, and you've got to remember that. They cover their backside first, and they worry about everybody else second. If you don't believe that, Fortunately, I have 2 shares of the Brooklyn Bridge available for sale, and also 2 shares of the Verrazano Bridge. So either one of those bridges that you'd like to own a piece of the action going across to Queens and stuff, please let me know, and I'll be happy to sell you those shares. I've held them in my portfolio for a very long time, so that we'll keep those in mind. Okay, someone's asked a question about Deutsche Bank and whether they should have their money in the Deutsche Bank in their savings account. Folks, from what I understand, and I have quite a few friends across the globe, quite a few in Germany, of course, the accounts for Deutsche Bank are insured to 100,000 euros, which is basically 110,000 US dollars. So that's something that we want to be aware of. And if you have more than that, then I would spread your money around to different banks, is what I would do if you'd be able to see what's going on. So anyway, we'll see how that works, but we'll watch and see what we have going on here. Remember, if we have some type of a big sell-off, we could easily see a pretty good rally in the Treasury bonds, because Treasury bonds and Treasury notes have been dropping for quite some time, and they are definitely oversold, but they're down in a level where they could easily have a pretty good rally, whether it would be a flight to quality rally, you'd be able to see. Now, another thing that you want to pay attention to that is really important, and this is from our good friend Jim Bartolioni. This is an intraday chart of the TLT. I'm going to put this up. This is the equivalent of being long the notes. And if you'll look at this, we have made a really nice bottom here, ABCD type structure. We went down and tested the old bottom several times. So it looks like the TLT is getting ready to have some type of a rally in this area. Remember, we've been down quite a bit now. And this is a spot where we'll most probably get a rally. If you're long-term oriented, I would not even worry about this 60-minute chart. But if you're in it for a few days or a week or so, you might want to pay attention to that, because it's a beautiful ABCD down at this level at a spot where we're right at the 78% retracement here on this 20-year notes, and that's a very, very important thing. Longer term, I really believe we're going down in the bonds, which means we're going to have higher interest rates. How that affects the rest of the market and U.S. dollar, no one knows, including this old cowboy. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to talk about gold here for a second. But I brought back some memories here. They're chatting here in the Tiger Den about the fact that Bob Dylan has received a Nobel Prize, and also the fact that the great king of Thailand has finally passed away at the age of 88. We have some very, very close ties to that because we know folks that are very, very close and related to the royal family. So I'm sorry to hear. I never met him. I met a couple of his cousins. But anyway, the good thing about Bob Dylan, the funny story, in 1972, when Doyle Brunson won the World Series of Poker, it was the first time someone had won $100,000 in a poker tournament, $250,000 in no, it's $100,000. Yeah, 72 was $100,000. Now it's $8 million. But they wanted to know if he would like to be invited to meet the president, and he said, no. He said, I'd rather meet John Havlicek of the Boston Celtics. Got to give that guy a lot of credit. Anyway, let's go on to the gold chart. If you notice here, this is a chart we talked about on Monday. The fact that we had a pretty good chance for a bottom to come here in gold this week. We mentioned that we believed, or we had a feeling, and just a belief, and just looking at cycles, that because of this super full moon cycle that we have coming in here on the 15th, on Sunday, that it's best to wait to see this cycle finish up, because it could be, very, very dramatic on either stretch of the imagination. But what's happened this week here is, if you notice, the price here on the gold is trading at 1258, and if you'll take a look here, what's happened after we made that 1258 level, 1242, you'll notice we rallied up really strongly on Monday. And on the rest of the week, going down into yesterday, we went down and we made a 61% retracement. And then yesterday, we rallied up to an exact 78% retracement. And now what we've done is we come down and we've tested the 61% retracement again. If we take a look at the silver market, the same thing occurred. You had a situation where the market made that really big bottom on the weekly charts and the dailies. And then on Monday, it had the really big rally. It extended a little bit longer than the gold. The gold topped on the 10th. Silver topped on the 11th. Then it came down to 61% retracement. And yesterday, it had a rally of about 30 cents, $1,500 up to the 61% retracement. And now we're coming down to retest the 1740 level again. What this says to me, folks, is pretty much what Joey John said when he was on with John Logan from Hong Kong, is that the market just not ready to go yet, because if that was a really good bottom on Friday, given everything that it had a chance to do, it would have exploded out of here. And in fact, it didn't do that. And that's another reason why we have to be able to be very, very aware that we can still go lower in the precious metals. Remember, we looked at this chart of the platinum. And you'll notice here that we had that really nice three-drive pattern coming in exactly at the 61% retracement. And, frankly, platinum has done very, very little this week. I mean, it's not acting like this is a significant bottom yet, but we'll watch that as we come into Monday for sure. Tomorrow, we're going to have Wolf Trader come on. Shane Smolian will be on. He's another one that's also been talking about the negativity that we have coming into this date that we have coming in on Friday or Monday. And frankly, it would be the weekend would be my suggestion, if you happen to be short, is to wait and see what happens over the weekend, because whether a crash is going to happen or not, don't try to put your life on these these crash scenarios and stuff, because the odds of it happening, I mean, last time we had one is 27 years ago. Well, we had another one in 1989. Today was an anniversary of the United Airlines debacle, where the merger fell out of bed and the Dow was down. It was down a lot. It was considered a mini crash, but nothing like what we had down 16% on the 19th of October, 1987. So 2 years later, we had another one. We had a flash crash of 1,000 points a few years ago that was basically, triggered by, who knows, fat-fingered errors. We didn't have fat-fingered errors back in '87. Everything was done by, looking in someone's face and getting the actual bid and offer and writing it down on a trading card and sending it in. But nowadays, everything's electronic, so you got to be to see what's going to be evolved. Okay, now. The next question that someone had was, it's lost my train of thought. Let me see if I can pull it up here. Whoops. It's back into the old memory bank of the old. Let's just get back to where we want to talk about now, which is the euro. Let's just get in here. This is what we were talking about here on Monday. We started to come down, you'll notice, in the euro, and we suggested that there was going to be some really strong support down here at par, which is, 110. That's not par, excuse me. It's at 110. That was a 78% retracement. That's what's happened so far this morning. We've got down to exactly that number. Whether it's going to be a good place to bottom or not, I don't know. But as we've seen with the dollar index, and we're going to talk about that one right now also, and that is because we have now taken out the highs of this 5-cycle thing. We've been expecting it because look at the higher bottoms that you've had here ever since June. You've had nothing but perfect higher bottoms, all along, which means you wanted to try to be short the euro versus long the dollar, and the dollar hit 98 this morning. So we have taken out the highs of July. And those were 5 ratios coming together. Now, the $64 question is this. Sometimes, and this happens occasionally in the foreign exchange markets, we have a really strong cycle date there, like July the 25th, and the market will go up and take that out and then immediately reverse, faking everybody out. Now, we'll know that if we get a move back down below 96.5 in the dollar index. But right now, this thing, it's been up for 10 days in a row, so that's an outlier event. The number of times you see a market go, 10 days in a row, that's going to be a 5% probability of that happening. So we're a really strong probability of the market moving a little bit lower in the U.S. dollar here, which is what the euro is suggesting to us, that we are looking at this possibility that we do have a little bit of support here coming in at 110. So keep that in mind. That's shorter term. There's shorter term thinking, but it's basically it tries to get into so you don't have to risk very much, when you're trading these things. And now we have to get to the old stop and pee here because everybody wants to talk about the stop and pee. I really loved hearing Joey Johns talk about that because he hit the nail on the head, folks. You really want to be able to just get this up here. 1 second here. We're already breaking down now. We're getting close to the 78% retracement in the, oh, shucks. Just a second. Where is it? Oh, dear. I got it already here, and I put it right in the front. There we go. Here we go. Here we are. Let's start out with the Dow Jones E-mini here. This is we'll start this out because we are below 7,900 now, folks. I haven't updated just since early this morning, but if you'll take a look at this, you're going to be able to look at this here, that we're looking for the Dow to come down about another 250 points to complete that big ABCD. 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I've expanded the E-mini S&P to go back the last several months, and you'll notice that the 61% retracement comes in at 2068. That number that we were looking at the 4-hour chart was 2075. So that's my guess. Now, there's a chance here, folks, if we get something really squirrely happening, that you could go down and make, all the way down to the 786 at 2008. Remember, just a few months ago, we dropped 100 points in one day in the S&P. That was the day the Dow was down 390, I believe. So with this full moon coming up and the fact that we have a perigee, which the Earth is close to the moon as it gets, which is 252,000 miles, this could be really something pretty significant. Now, astrology doesn't work all the time, but when it does work, pay attention to it, because that means the cycles are pretty much locked in, and we should be looking at a pretty good bottom here between the 14th and the 17th. Now, if we bottom on Friday and then we gap up on Monday, then you're going to have to change it. But chances are, over the weekend, there'll probably be something come out. I mean, and believe me, there's enough stuff in the news that could make the market move 400 or 500 points in the Dow without any trouble at all. In 1987, Secretary Jim Baker was in Japan, and he came out, and the first words out of his mouth was regrettably. And the rest of it was, we were unable to reach a trade agreement with Japan, and the currency markets went absolutely nuts. The Swiss franc jumped 250 points. We didn't have the euro back at that point. And gold jumped $35 to $40, and then the stock markets came unglued. We didn't have overnight markets, of course, but the Nikkei didn't get hurt much at all, because that was 87, and it didn't top until December of 1989, 2.5 years later. So there'll be some type of event that will trigger it, would be my guess. I don't know what that event will be, but with the given environment that we have of all the news that comes out, wars, political, economic, gosh, it could be anything under the Fed could raise something. Who knows? But we'll see. If we close below 2100 is not very far away. We're trading at 2114 right now. If we were to close below 2070 on Friday, and that's only down, that's not very much. I mean, if we close below that on Friday, then look out. Then you're going to be something really, really big. And it might not just stop on the 17th either. It could just literally, that could be the beginning of it. So we don't know. So fortunately, for our 24/7 service, we're probably a little too much short than we should be, but it's all working. But the VIX index was the easiest one to play this week because it was at such a low price and gave you really good entry to see if any of this stuff falls apart. Remember, this is all probability. Sometimes it works, sometimes it doesn't. If you keep remembering to protect your backside, you're going to be okay because you'll win more than you'll lose, and you're not going to be right all the time. And when you think you're right all the time, just send your checks directly to me because you're going to be giving it to somebody else. So just remember that it's just a probabilities game is what it is. But the odds are on your side. That's the real difference between pattern recognition and some of the other systems that are out there. That does put the probabilities on your side. Unfortunately, they don't always work. If they worked all the time, then we would be looking at something that would be very, very unusual in itself. But realize, folks, that we are down 130 handles in the NASDAQ in 2 days. I mean, that's just phenomenal. I had an order to sell the NASDAQ. I missed it by $110, and that now has over $3,500 profit in it. But that's neither here nor there. You can't do anything about that. That's past tense. Your order was placed properly, but you just didn't get filled. Let's remember these numbers. We'll say them again, okay? But the number of 20, we're trading at 2113 now in the S&P. 30 handles lower. You're going to be at 2075, roughly 2075, 28 handles lower. If we close below 2075 on Friday, my guess is that we're probably going to break 2,000. That's just my guess, based on historical stuff and looking at what the VIX is doing, the state of the market, all where the Bradley is. All of that stuff could tell us that we're getting ready for something, a little bit more ominous. So that's the way I look at it. Now, if this market turns and reverses and gets really strong here, and we get above 2150, that would tell us that we missed the bottom once again, and then we'd have to reevaluate. So that's what we want to. That's what we want to keep a close eye on. So we are at some pretty. Not really good support, but minimum support here at 2115 in the S&P, but it's very, very minimal. And the reason why I say minimal is because I'm just looking at a 2 or 3 hour chart, and we have three symmetrical bottoms, and we've made a 1.27 on the NASDAQ, but we're not able to do that in the S&P. But this is a really short term, and you really, if you're playing for something larger that could happen on Monday, you don't want to be looking at that. Go look at the euro, or go look at silver or gold. They're doing nothing either. They're universally trading in a $1 range here in gold and a 5-cent range in silver. So nothing's really happening there. The only action that is really going on is in the currency markets, where we're getting some pretty good moves in the Japanese yen, which has been a really nice trade here up at that 104 and change level, and also the fact that the euro could be bottoming here at this level of 110. But the rest of them, they're just hanging here, looking like they're ready to fall off a cliff. That's what it looks like to me. Just look at those charts, folks. They're scary. And just look at the VIX chart. The VIX chart itself, I don't even know where the VIX is trading this morning. Give me a quick check here to see where we are here. With the VIX, and we'll see if we get above one. We just went above 117. Excuse me, I should be so lucky. 1712 is where we're trading right now, and that's the 61% retracement off the last high. So keep in mind that's that I don't. I just this looks bullish, folks. That's just That's just the bottom line that I can see here. Okay, I have one other question. I happen to be on a guest on another commodity show as a quick guest out of Europe the other day, and I made a comment about the what I would consider to be one of the trades of the year. This is something we were talking about with Rich Anderson yesterday, and that was to buy December hogs at 42 and change. They were trading at 42.75. They're now at 44.05. And this is a giant ABCD with a 1.27 of the CD leg. Hogs, the cost of production on hogs, folks, is $47 a pound. So every time a farmer raises a hog, he loses money. Now, how long do you think he's going to keep raising hogs and losing money? Not very long. And then what happens is he gets rid of his herd that puts more pork into the market, pushing prices down. And then there's no more little baby pigs coming out. And guess what happens sometime in December, January, February, and March? Yep, higher prices in hogs. So keep that hog chart handy. 877-927-6648.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long, short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I've posted a chart of the E-mini S&P in here, much to my chagrin. The reason why I say chagrin is I don't want to predict the bottom in here, but folks, we're setting it at 1.618 expansion. There's a 3-drive pattern here. If it's going to hold, it's going to hold right here. So let's just watch this, and you make the decision. But I wouldn't risk more than 3 cents on this. It's trading at 21.10 now. I'd give it at least 5 or 10 minutes to make, 15 minutes to make sure this holds, because you've got a really bad move coming over there. We're down about 35 handles in the NASDAQ, and it is broken through that number by a great deal. It's only the S&P that has held up here at this level. Just watch it. It could be important. It might not be important, but 2110 is an important number. Looking at the old Fibonacci spiral type stuff that we watch. So that's another one to keep a look at, keep watching also. Also, on the other hand, if we get above 1275 in the gold, we've got a chance at a lot more to go to the upside. So that's another one that you might want to watch. So 2110 in the S&P. 1275 in the gold, and I still think we're going to go a little lower in the gold because of this super full moon that we've got coming up. And that's nothing more than a 14-day cycle, but it's so important because we have the moon is as close to the Earth as it gets. That's perigee. It's also whoopsie. There you're at 2108 now in the S&P. That's why waiting is the best thing to do. So scratch that. I wouldn't touch that right now. That's no good. You might ask, how can I say that on a 2 points on something that's trading at 2110? I believe in those 1.618 numbers, boys and girls. They'll get you to the promised land, more than anything else. So I think the next stop we're looking at is 2175, 2170, and below 2170, you just look south because it'll break 22,000 without any trouble, I believe, in the next couple of days. But remember, opinions are like armpits. Everybody has one, and it usually smells. So just remember that. 877-927-6648. Billy Ray Valentine signing off.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.